I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. A swing and a miss. The USDA's quarterly grain stocks report showed corn supplies declined from a year ago, but not as much as initially thought. September 1 corn stockpiles in all positions totaled 1.53 billion bushels, down 13% year over year. September corn stocks fell for the first time since the 2020 and 21 marketing year. On-farm bushels totaled 643 million, 18% lower than a year ago. Additionally, on-farm stocks represented 42% of total volumes, which was the lowest share since the 2021-22 season. The USDA's estimate came in about 200 million bushels higher than pre-report expectations, which was seen as a large miss by the market. This chart shows that the USDA number was well above the high end of the range. Tuesday's stocks numbers will be used to adjust the 2024-25 carryout estimate and the 2025-26 carry-in estimate and forecast in next week's WASDE report. September 1 soybean stocks totaled 316 million bushels, down about 8% from a year ago. The USDA number was more in line with pre-report expectations and just below the average analyst guess. Soybean stocks in all positions had been increasing since the large drop following the COVID-19 pandemic. Tuesday's report marked the first decline for the carryout estimate since 2020. On-farm supplies fell 18% from a year ago to 91.5 million bushels. The share of producer-owned bushels fell to 29%, down from 33% a year ago. September 1 wheat stocks totaled 2.12 billion bushels, up 6% from a year earlier, the largest since the 2020-21 season. Volumes came in above market expectations, which had expected an increase. The USDA estimate came in well above the average guess, but was still within the range of pre-report expectations. The USDA's annual small grains summary, also released on Tuesday, showed higher than expected wheat production due to increased harvested acreage for HRW and SRW wheat. U.S. hog supplies could get a little tighter moving forward, according to the USDA's most recent quarterly hogs and pigs report. As of September 1, the U.S. hog and pig inventory sat at 74.5 million head, down 1.3% from a year ago. The decline was driven by a 1.8% decrease in the breeding herd, as well as a 1.3% decline in the market hog herd. On a statewide basis, larger year-over-year reductions were seen in Indiana, Minnesota, South Dakota, and North Carolina. Meanwhile, year-over-year increases were observed in Nebraska, Missouri, Illinois, and Ohio. The number of sows that farrowed in June through August totaled 2.9 million head, down 3.4% from the same period last year. That was the second consecutive year-over-year decline for the quarter. Higher rates of pigs weaned per litter were unable to offset farrowing declines as the pig crop totaled 34.1 million head, a 2.6% reduction compared to a year earlier. USDA livestock analyst Mike McConnell says lower farrowings could mean fewer hogs entering the pipeline going through the fourth quarter of this year.
Hog supplies are going to be a little bit tighter for the remainder of this year and into 2026. The breeding herd has contracted a little bit relative to a year ago. That also kind of indicates that hog supplies going forward are likely to be a little bit tighter.
The U.S. hog herd has been showing signs of tightening. Slaughter volumes have been lower for much of this summer compared to a year ago. Recent data showed weekly hog slaughter was above last year for the first time since May. Additionally, average hog weights have been plummeting since this spring, which is generally bullish when coupled with lower slaughter rates. Declining pork production has kept upward price pressure on live prices of hogs and pork. The industry will continue to monitor if observed tighter supplies will keep hog and pork prices higher for the near future. Argentine farmers are expected to boost corn plantings this season. The Buenos Aires Grain Exchange reported that 2025-26 corn production is expected to reach a record 58 million metric tons, up 18% from the previous season. Farmers are shifting more soybean acres into corn this season. The Rosario Board of Trade stated that higher acreage and favorable weather conditions increases the chances of a record corn harvest. Meanwhile, soybean production is expected to fall to 48.5 million metric tons due to lower soybean acreage. If realized, that would be a 3.5% lower than the previous season. Argentinian farmers have already begun planting corn for the upcoming season. Soybean planting won't begin until later this month. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.